GM everyone. Hope everyone is good. We will start in 1 or 2 minutes. Just waiting for some guests and for Alex to arrive.
We're gonna say hello, hello, everyone. Can you hear me? Can you see me? Yay! No, Tom, I can't hear you.
No, don't tell me that.
No, can't hear you.
Guys, we will have a big issue.
Wait, we're gonna see. Well, I mean, we haven't been lucky for a couple of weeks, so maybe we needed a little bit of a challenge to get a bit stronger again. So, everyone, if you can let us know, can you hear me? Or can you hear Toma, or can you hear both of us? Because I can't hear Toma, but maybe I need to rejoin. Both hear both. Okay, so it's just me that can't hear you, Toma. Okay, Toma, can you hear me? Okay, so then I will rejoin and try and what setting have I changed? Okay, I will rejoin and hopefully that takes care of it. Thank you so much, guys, for being able to hear me, but I need to hear Toma for this because we got exciting stuff today. There is, what have we shared? We've just said that there's going to be some guests, so it's going to be a fun one. Wait, I'm going to rejoin and see if we can get this going.
Thank you, guys. Hello, everyone. Ififok, Cheeky Steve, Alpha Cypher, Dan. Nice to see you there, guys. So today we have announced guest, as you knew it, but we'll also have surprise guest. So I will let Alex do the short intro. Hopefully now you can hear me. If not, I will just chill. No, you can?
Was the classic. I had muted the tab. That was the...
You're using Discord on Brother, man. This is so boomer. You need to have the...
No. Some of us
Alex,
I gotta keep the boomer energy. All of us, there's so many young people around us, like, somebody gotta be old and boring and be like, how does this work?
Okay, Alex, so you remember the agenda, right? We have Maxime that is going to jump in and present his project. This is going to be at 12:30. But first, we have unannounced and surprise guests that you guys know already. Probably you saw them already in the crowd. And Alex, maybe you can do like a 2-minute intro, and then, dear guest, you can request to speak, and we will add you to the, I don't know how we call this, to the board of speakers. Stage.
First of all, welcome all of our lovely Galacticans, Cypher Uni members, our advisors, ambassadors. I can see a lot of you in the group chat. It's amazing to have you all here. Today is going to be a real Alpha Friday, like a real one. We have, as Thomas mentioned, we have a good friend of ours, actually from way back in the Swissborg days, Maxime. Maxime helped to do a lot of the paid advertisement. He did a bunch of stuff at Swissborg. Wonderful person, human being. He's now also very involved in a new project called Wind Mining that we're very happy to speak to you about. But before we bring Maxime on, we have two more guests. And these people are actually people that we've been speaking to for quite some time. Sorry, Bernardo, I'm going to pass the mic over to you in a bit. I'm just going to give you a little bit of an intro because I don't know if people remember back in, I think, September, or actually before the summer, we started to speak with some really smart mathematicians over at Private Pools. And this conversation has now evolved. They have also met our very good friends at Hilbert Group, Coin360 and A360. And I'm not sure how much I'm actually allowed to share about what these guys are doing, so I'm going to leave that to Bernardo. But what I will say is that I think we are on the verge of, just like DeFi summer back in 2019 before the 2020 pump. I think that we are in for the RWA summer. And I think that there is, just like with DeFi summer, we saw not just sort of some of the verticals, but we saw entire ecosystem come to life and enabling liquidity into DeFi, but also synthetics, derivatives, people leveraged. You need to sort of have the suite of features to enable an ecosystem to really go supersonic. And what makes me really, really excited is that for the last 2 months, a lot of the partners that me and Thomas have spoken to, we can hear that this is happening. All of the big chains are scrambling to figure out how can we use as RWAs as collateral for lending? How can we try and get TradeFi assets? And what makes me really happy is that the man to the left of me has been thinking about this for months and have a head start on a lot of them. And without any further ado, I think Bernardo is one of the most brilliant mathematicians. He's very similar to Misha in that he can do math that I can only dream about. And they have found an incredibly interesting opportunity together with A360. And I think we have Jens coming up as well in a tiny bit. But first, over to Bernardo. Amazing to have you and Private Pools represented in here.
Thank you so much. Thank you for the intro, and you are far too kind. But I appreciate the positive message. So for private pools, as a small description, and then I'll touch into how this touches into A360, and then I'll let Jens talk more about that. So private pools, we started the development for this quite a long time ago, over a year ago. And it's essentially a privatized order flow system leveraging AMM technology to essentially create a market making engine that has access to privatized order flow on an AMM engine and essentially optimize returns for index fund liquidity providers. And the whole idea behind this is that LVR, loss versus rebalancing, is a ubiquitous problem across all of the liquidity provision, across all liquidity pools. And what ends up happening is arbitrageurs make a whole lot more money than you do as the liquidity provider. So when we built private pools, we essentially inverted the model, we privatized the order flow, and we have our own market making engine, which has exclusive access to the trading liquidity and the liquidity pools to be able to market make these pools and generate returns by arbitraging this against centralized and decentralized exchanges and sharing the profits from the arbitrage bot to the liquidity providers. That's a very simple explanation to what we've been building. However, this opportunity kind of exploded into something a lot bigger when it comes to real world assets and our collaboration with Hilbert to build out A360, because then the technology gets really crazy, because essentially what we're doing is we are adapting our technology here, and we are creating a decentralized exchange, so now everyone can trade. However, the market making engine trades with prioritized order flow instead of private order flow. And why do I call it prioritized order flow? Essentially, our market making engine doesn't pay fees when it's executing trades against the DEX, giving it exclusive access to arbitrage against these pools compared to a competitive arbitrager that's trying to compete with us, which allow us to essentially create these index funds of real world assets on chain that actually represent, stocks in the real world. And our trading engine is arbitraging this against the real traditional market with exclusive access, so that it can essentially optimize the returns for you as the liquidity provider, protecting you from what would be essentially drainage from traditional arbitrageurs in the market. Essentially, it acts as an incredible tool because we can use this market making engine as what we're calling a benevolent market making engine. And that benevolent market maker optimizes your returns and also keeps the spread tight in our AMM against the real market. giving the traders better pricing and giving the liquidity providers better returns, giving everybody a better life as part of the ecosystem.
So, okay, wait, we need to take a moment on this. Jens, I love that you're in here again. For all of the people in the community, some of you have already seen the beautiful Jens and one of the geniuses behind A360. But before I pass it over to you, Jens, we need to, because Bernardo, you just shared so much alpha, and half of it went over my head because it's technical what you are discussing. So I just want to do an attempt, at least, to break this down. I want to get people excited by saying you're going to be able to earn from this. And how you're going to be able to earn from this is that you can actually provide liquidity into these essentially index pools that do arbitrage for you. I love one of Private Pool's first slogan. It was arbitrage with us or get arbitraged by us. And I think that's like exactly what Private Pools has named, right? If you are an LP provider anywhere in crypto, you're literally going to get attacked by ARBs. They're literally going to pick at your APY or AAR, regardless how you measure your profits. They're going to pick at it and arbitrage it till it becomes smaller and smaller and smaller. What Bernardo and them have geniusly figured out how to do is essentially to stop that arbitrage front running and enable you to be the first arbitrager for these different assets, right? So nobody can front run you. You have the front row seat. And in addition to that, because they've teamed up with this handsome fellow to my right, and Hilbert and A360 and Coin360, they have the sexiest assets in DeFi that they can actually do this arbitrage on. And that is huge, because if I'm not misunderstanding this, you guys are opening up an arbitrage opportunity between the major gap that is DeFi and TradeFi. And on that note, back to Bernardo, or here's where I loop in Jens, because like this is where I want us to really, as a community, understand the freaking potential. And that's why I would like, this is a little bit Wall Street bets. These guys have figured out a way so that nobody can front run you, but so that you are the front runner of arbitrage for literally the biggest arbitrage opportunity in our generation. The difference between DeFi and TradeFi. That's where you're going to be able to arbitrage with these guys. This makes me, sorry, I can't finish that sentence because then I'm going to get cancelled. But this is exciting. Who want to go? Bernardo, did I do it justice, or did I miss any of the critical things, or was it okay, simplified explanation, or?
It is perfect. It is perfect. And I am very bad at talking normal language. So you did a better job than I could, to be honest.
No. This is why Misha hired me. He needed somebody to understand geniuses and just translate it. So luckily, I've had practice with our own genius, Misha, and I put you on the same position as him. Like when you get into the math, then I feel like a 5-year-old. But you've explained this to me. You've had enough patience to explain this to me 5 times. So by the 5th time, I finally understood it. Beautiful. Jens, I'm going to pass the mic over to you, but just short intro. Jens, one of the people that we've had the joy of coordinating with a lot on A360. He's also the guy that has helped us create the surveys that you guys have answered, all of that participation. He's also the guy that is going to give you guys early access to the actual platform. So all of you 150 plus people that have said, I want to be a part of testing out A360's early decks and all of this cool functionality, not just yet. You're not going to get access today, but you are going to get access very soon. And this is the guy that's made that happen. Without any further ado, Jens, welcome back to the Alpha Fridays.
Hey guys, thank you so much for the introduction, Alex, and thank you, Bernardo, as well for framing it. Hello, Thomas, and hello, the beautiful community. 80 people in here. That's amazing. It's so good to be back here. You know, it's always fun to talk about what we're doing and how we're going to move this thing forward, and just in general of updates on what we've been building. And I think Bernardo put it very well, but I just want to recap a bit, like what it is we're actually going to do and how this sort of ties into what Bernardo just spoke about. If anyone remembers, or if you remember, the whole idea here of what we're doing is that we are bringing like RWAs, like proper equities from the real world on chain, right? And this is not just your average like Tesla stock and stuff like that people already are doing. We're taking like a pretty niched sort of stab at this, we're going to bring not just, normal public equities, we're also going to bring specifically pre-IPO shares on-chain. And these aren't just like any stocks, right? And these are going to be like your OpenAI, they're going to be your Discord, right? Stuff that people can't trade. OpenAI, Discord, SpaceX, stuff like that, right? And we're going to bring them on-chain. And we've worked out a system. I can't go into detail like how this will work. You can check out our white paper and read a bit about it there if you're dedicated enough. But this will be more clarified in the future. But we have a system for this, and what we're going to do essentially is bring more or less like traditional liquidity, like actual big liquidity, bring that on chain and allow you as a user to not simply trade these pre-IPO shares like a synthetic derivative, but actually, hold them as spot tokens on chain, right? And as I see a comment here, like you need more regulation, right? That's what we've been thinking about. I mean, that's one of the core pillars that you actually need to have in place in order to do this, right? It's a huge thing. It's a huge thing with compliance, and that's why we are especially, here with you guys, Galactica, right? Because you're filling one of the biggest gaps here. That's with the CK KYC, right? And that's one of the few things you need. There's also a bunch of licenses you need in order to do this. You need an actual inventory of these, RWAs, these private equities, right? And if you have all these things in place, which we more or less, have or are about to have, you can do this, You just need a proper way to tokenize it and then bring it on chain. But the whole idea is that you will own the actual spot assets of these equities, holding it on chain with your CK KYC wallet, and then you will be able to trade them, put them into like money markets, like Aave, for example, right? So it won't be just idle capital. It will be like actual flowing, efficient capital, which will be representing or which will be like actual then SpaceX, OpenAI, Tesla even, for example, right? And this is sort of where Bernardo comes in with what we've been speaking about here, the DEX, right? The idea is that it will be still crypto native. There are already kind of solutions like this, right? Where you have a gated sort of experience where you need to sign up, you need to be approved, and then you can sort of trade it. But it's only for accredited investors. And this is going to be for everyone. And we're going to keep it crypto native by doing, what Bernardo just spoke about, which is the DEX built by private pools, which will have this in-house arbitrage engine. I don't know if you caught that, either when Alex told you or Bernardo, but this sort of in-house arbitrage engine will more or less be something we do from our end to arbitrage it, then give it back to the liquidity providers, staking these assets in the liquidity pools. And this is also very needed when it comes to securities and equities, right? It's a huge thing. The governments won't like it if you would have these assets and then be like, let's say, like if there comes in people and do sandwich botting, arbitraging it like random people. So this is also a huge thing for the regulatory purposes or the regulatory perspective. So just to give like a very like broad overview of where we are right now and what we've been doing, we've been working with now Bernardo and private pools with Alex and Thomas as well as the remaining Galactica team in order to properly integrate this and build something of it. We are also in talks with many new partnerships. I can't give out like very specific details right now, but we are in talks with a few like money markets, such as, like Aave. I'm not saying specifically Aave, but, money markets in that range in order to use these assets as collateral then, in order then to borrow from it, to get like an experience of, I would say, like efficient market. And that's sort of where we are at right now. I wish I could share you, more. I want to really spill the beans on everything that we've been doing, but
do it.
I really can't. So,
no.
Yeah.
we got. Not yet. Maybe next week.
Maybe. Yeah.
I was about to say, can we mention the big B for the private equity positions, but maybe not even that.
I don't think so. Not now. We need to wait a little bit. It won't be today, unfortunately, but we can do it as soon as it's like fully done, right? The big B, yeah.
Okay, so what we really wanted to do here, because as you might see on my, like, I can't hide my excitement. This is ridiculous. This is legit. Most people, and you will hear that maybe if you join the cheeky crypto space right after this, but right, most people are like, 2025, we're most likely going to have quite a big turn to the upswing. The fundamentals of the industry looks fantastic. We have a bit of in and outflow due to the ETFs that might create price volatility on the short term. But there's quite like a unanimous consensus that most likely we're going to see a gradual swing to the upside by Q3, Q4, what we normally see around October, November.
Yep.
Everybody's looking for what is the big catalyst that is actually going to drive this. And there's like, and this is why I want to bring up, like, for everybody that's been here for 2 cycles and were experienced and were here during DeFi summer, I can see how this is unfolding behind the scenes. All of Jens mentioned some actors, like literally every big actor that is in the top 50 tokens, every layer 1, everybody is rushing to try and capture this space.
For sure.
We speak to most of the layer 1s because CK KYC and because of what Galactica does, etc. No one has such a retail-centric focus where you guys get to capture the value creation. Most of this can be done by big guys going, I'm going to put 5 billion with you. Perfect. You're going to do this for my market maker. And that's how we bring this on chain, right? You don't really own it. It's not really spot trading. It's sort of synthetic. You're going to get arbed to pieces by them, which means that you're going to get maybe, if best, the same APYs that you're already getting in TradeFi if you're in TradeFi. What Bernardo and A360 have done is to ritually rewrite the infrastructure of how this is done, and they have put you guys as the biggest benefactor because you are going to have front row to the ARB opportunity between these behemoth markets coming together. Because what happens now is that there's new price discovery, right? On the pre-equities, on the spot traded TradeFi assets. If Elon Musk does a ridiculous tweet on Saturday, there is that doesn't change Dow Jones pricing until Monday when markets reopen. If Elon Musk goes on a mushroom bender and does crazy stuff, that will, we have seen, majorly affect the Tesla price, right? If you haven't seen it since Elon partnered up with Trump, it literally pumped 20% and now it's down another 25-ish. So it's literally where it was right before the election. You are going to be able to arbitrage the difference between DeFi and TradeFi on these spot instruments. And in addition to that, you are going to be able to buy SpaceX, OpenAI, pre-equities without being an accredited investor. An accredited investor means that you need to have at minimum $150,000 or euros. You need to have a proof of record of your investments to show people that you understand and know what a security is, what a pre-IPO is, the risk that comes with that. There is a shindig that you need to go through to become a private accredited investor. That goes out the window. And even if you are a private accredited investor and have access to OpenAI, you do not have access to the arbitrage opportunity because you need so much liquidity and you need the infrastructure to be able to be the best front runner yourself. This is what these guys have figured out. This is
hell yeah.
This is multi-billion-dollar, if not trillion-dollar industries that are about to be disrupted by retail. Because you guys have this is why I'm this is the best Wall Street. This is the infrastructure for Wall Street bet sustainably.
Yeah.
That's
a good way to put it. It's going to be
insane.
Sorry,
I'm too hyped. I need to calm down.
It's good. I like it. I love it. Just one thing worth mentioning as well, right? So not to forget, right? We are, this whole idea and the company behind it is actually Hilbert Group, right? So we don't want to forget that. We are Hilbert Group, right? And Hilbert Group is a NASDAQ-listed hedge fund. And we're listed in Sweden on NASDAQ, and we have $500 million in AUM at the moment. We are partnered with Xapo Bank, which is one of the biggest banks for Bitcoin, overall. And we are running their Bitcoin yield Byzantine fund, right? About $400 million. And the idea here as well is not just to tokenize these pre-IPO assets, it's also to tokenize the actual funds and to put those on chain, right? So imagine getting actual returns or yield on Bitcoin natively. Don't forget that. That's also a huge thing. The pre-IPO shares and the RWAs, That's going to be one thing, but we're also doing this thing with Hilbert, right? And Hilbert is big already, but it's going to get more or bigger as time progresses. But we'll put this on chain, so you will essentially be able to get a native yield on Bitcoin using the algorithms that established Hilbert is using. Yeah, just wanted to mention that as well. Also a huge thing in our pipelines.
This is a big one,
really
Jens,
cool.
that you just showed there.
I also
Yeah,
just want to
this is
highlight
gonna be.
that, you might have seen other native Bitcoin chain. Me and Tom have spoken to them. They do not do native yield on BTC. What they do is that they take BTC, you can lend that out to private actors, you can take that BTC, you can convert it into convertibles. Now you have cash that you can put into money markets or credit markets. That's how they generate yield. Not natively on BTC, right?
Yeah.
Very important distinction. This is legit the first time ever I've heard about native yield on BTC.
And,
As Jens
and
said,
think
literally.
about-
Oh, sorry, Bernardo, I speak too much. Jump in.
I was just going to say, think about the scalability of the offering itself, right? Because the amount of money managed by large funds in this space is quite big and entirely inaccessible by retail. Essentially, what they tell you is if you're poor, you can't give your money to the best asset managers in the world. Through this, retail will actually be able to access exposure to the best money managers on the planet and essentially generate returns on their assets, because the BTC fund is only the beginning, right? There's a lot cooking there. It's a very powerful offering. I am fairly confident that the BTC fund alone, compared with comparing the returns that Hilbert is able to provide versus the rest of the market right now of what people can access in retail, I mean, just that alone, it's a bare minimum $1 billion market in terms of liquidity. And as you start expanding this, I mean, the offering goes. The potential is very strong, and I mean, I can tell you that I'll be using it myself because I've been looking for something like this for quite some time. And well, I'm pretty sure, like most of you, we've all been underinvested in Bitcoin through this cycle, and that was clearly a big mistake. Well, now you can actually generate yield on your Bitcoin and generate yield by the best money managers in the world. And I've spoken directly with the Hilbert guys, and if Alex is calling me a genius, well, I can tell you that that the Hilbert guys are really, really, really smart. And there's going to be some big things cooking there as well.
We can, as a Swede, I just need to jump in because I'm a little bit proud that it's Hilbert that is taking the lead on this.
Yeah.
Hilbert is one of the biggest and most successful hedge funds in Sweden. They have the leadership with Holmgren and some of the other guys at Hilbert Group is, I don't know the exact IQ of them, but I know the Mina, which is like how you measure. Screw it. Mina is just a thingy, but like the fact that they've been working with Sapo, right? Just Sapo is one of the OG verification badges in crypto. Sapo Bank opened its door in 2014. Honestly, how many people of us in here bought Bitcoin in 2014? Not that many of us, or congratulations, you're probably joining in from a private plane or a yacht. Because Bitcoin at 2014 was like, if we only had a time machine, right? Hilbert Group started to work with, like, they're just incredible at what they're doing. Thank you guys so much for joining. This is supposed to be just a small teaser. I feel like we've given so much away, but there is so much left to come. I will be speaking about this.
We will have a follow-up, Alex. So
yes,
we will have a follow-up because we want to have a proper space with all the team, Private Pool, A360, also probably some friends from CT.com, Cointelegraph. We will take the time, and we will also probably gather some questions for the community because I've seen a lot of very on-point questions. We won't have the time to go through it today, but we keep them. I noted them down. We keep them for next week, and we will do the space that the project deserves.
Yes, and I saw one like, please launch date. I will be very frank and direct. We're going to launch when we're ready with these guys, because this is going to change the world, and it's that simple. So yes, the plan was end of Q1. When we are ready with these guys, that's when we're going to launch, because this is going to change the world. We feel confident about the timelines, and hopefully as early as maybe next week, you guys are going to start getting access to this. If you did the quest, if you didn't do the quest, I'm sorry, you're going to have to wait. That's why join Cypher Unit if you haven't already done it. I guess all of you are in here because you're a part of it.
Yeah.
Huge shout out and thank you to Jens and Bernardo. Not only are they going to come back, but me and Tom are going to be speaking about this probably every week, because there is no more asymmetric route for crypto in attracting liquidity than what these guys have just rolled out. And I'm going to try to explain this from 5 different angles to make sure that everybody that wants to understands and can be a part of this, because you 91 people, I just want to, Jens represents $500 million together with Hilbert Group in just what they manage without Sapo. Another $400 million that they have together with Sapo, right? Like, these are incredible actors with some of the best reputation, some of the best managers in the world. You 91 people are literally the first people to hear about this. And you're going to be some of the earliest people to get access to this. If you ever wondered what it was like to be in the Reddit Discord when Wall Street Bet started, today is the day. You're at that moment. This is literally it. I know that 99% of the people in both the team at Galactica, at BAD, and at all of our partners, all of us are like, we have our money ready so that when this goes live, we can give it to Bernardo and Jens into these liquidity pools. Not financial advice, but please, for the love of God, do not miss this summer. Make sure that you have powder ready to be deployed. Sorry, that's what Shane, the previous VC manager at Swissport, used to say. Be ready to have capital deployed. That's what he called powder. Do not make any, there's no other analogy there. Just thank you, Jens. Thank you, Bernardo. What you guys are doing is incredible. It's very aligned with the ethos of crypto. I love it.
Yep.
Thank you so much for working on this and having the approach that you guys have, because I've spoken to like countless other actors. None of them are prioritizing retail and retail liquidity like you guys are. Most of them are looking at how can we make billion-dollar deals behind the doors. It's already happening, but you guys have a superior model to them. So you guys are going to be able to arbitrage the literal big puckers that do this behind closed door. You're going to arbitrage those guys. That's why I'm like, this is Wall Street. Sorry. Jens, thank you guys so much. We're going to prepare to have Maxime come up on stage. Jens and Bernardo, any last words?
Thank you.
Thank
Just
you for
very happy
having
to be
us.
here. It's been a pleasure. Yeah, thank you so much. We're looking forward to come here again and speak more on what we're doing and how we're going to move this thing forward, moving the needle. It's always a pleasure. Hopefully we'll see you guys in our Discord as well. We're looking forward to everything surrounding this. It's been great. Thank you so much. Really appreciate it. Have a nice Friday.
See you guys.
And enjoy.
See you soon.
Bye-bye. Thank you.
Thank you for
Cheers.
joining.
Thank you. Bye bye.
Wow, it's a hectic
Hey, Maxime.
today.
How are you guys?
Amazing. It's very good to see you again. So everyone,
Yeah,
Max,
super
the man
excited.
Gen from Swissborg, has conquered the world. Now he's back to enable all of us to earn money by doing nothing. Or no, that's not really the case. But to earn, I love these projects because, as you all know, I'm one of those guys that are boring. I invest in Bitcoin and Ethereum and then in cash flowing assets so that I can automate my DCA. Maxime is not only incredibly skilled and knowledgeable in his area of field, but he's working with me, We Mining, that is doing something very cool with Bitcoin mining, but also other mining assets in the UAE. Without any further ado, Maxime, welcome. Amazing to have you here.
Yeah, thanks a lot, guys. Super stoked to be here. Thanks for having me. Also, special shout out to the Galactica community because we just launched our, Twitter profile, and since you posted, it's amazing to see real people commenting, being behind the screen, and also like being super motivated, doing some research, being knowledgeable about crypto as well, because it's not just about quick gains or just clicking to get an airdrop giveaway or whatsoever. You can see people are really interested and dedicated to crypto. So that's amazing to reach out people like you, especially when you're started. It's not that easy, as you all know right now, to get exposure to good people and make sure you're not just be supported by an army of bots. So thanks a lot, everyone. You just introduced it well. We are going to be mining for sure, but the project, it's called We Mine, so maybe we should rebrand at some point. I don't know, but the name itself is We Mine. But we will be mining anyway, guys. First of all, I wanted to just before introducing what we're doing exactly, just explain a little bit the ecosystem and who's backing the project, because it's quite important. We mentioned in the tweet, if I remember well, the structure of the talk. So first, what are the barriers and why we are not all mining today? Especially when you think about it, mining Bitcoin right now was around like 55K. So when you take the delta between like the price of Bitcoin on the market and what it costs to mine a Bitcoin, you have a decent yield at the moment. Thing is, it's not so accessible for all of us, mostly because it's a complex market. You need to manage your risk. You need to renew the miners. You have maintenance fees. You need to have good electricity cost as well. And electricity cost, it's not just having access to cheap electricity. You need good contract, monthly contract. You have futures contract and so on electricity to make sure you can mine at a good price for a certain amount of time to have good forecast in your future income. So super complex to set up your own miners as a retailer, and I consider myself as a retailer. It's not bad to be in the retail market. We are the knowledgeable retailers, and those barriers are definitely the capital that you need to start mining. Then the skills, of course, it's complex. You need expertise, and then regulation. It's not so easy if you want to deploy large infrastructure. So of course, would like to break down those barriers and unlock those yields and those opportunity to every people on the retail market, and to make it liquid, because the last part of it is, if you take your mining rig, you invest, then this investment is roughly illiquid. You can't do much about it. So if you invested like 10, even 1,000 or 10, 20K, you will mine Bitcoin, but then those 20K, this initial investment, to get your money back, you have to wait. And while you're mining, you cannot access to this capital. So it's roughly illiquid. So, we decided to fund it to give access first to make mining simple and accessible to everyone, so you can mine from basically everywhere at any time, and to help you stay liquid. So that's an important aspect of it. And I will come back to sustainability because it opens up the field for even more yield in the future. First of all, we are backed by Earth Mining. So Earth Mining is a company that was founded in 2022. They've built mining as a service, so they mine proof of work token, mostly for people like more institutional players. You need, I think, at least 100K to start mining with them. But they are currently, the last number I heard, they were managing 100 million of mining facilities. So they have like quite large mining facilities at the moment. They mine different proof of work tokens. Of course, Bitcoin, and among them you have Lithium. So Lithium is what I call proof of work on steroids, because it's a protocol that lets you that is using a consensus algorithm that is proof of less work. So at a certain point you don't consume energy exponentially. It's using sharding to scale. I'm not going to go too much into the details, but it's proof of work with less energy consumption, smart contract programming on top of it, because it's L1, and you have also the scalability. And Earth Mining and Lithium collaborated together to basically launch WeMine. So we are backed by Earth Mining, and we are funded with the grant program of Lithium. So those two are already two very strong partners. How are we going to do that? That's, I think, the more important things here. First, of course, miners, if you want to tokenize them, it's a real world asset. We will start by tokenizing those mining rigs into NFT. So you will have fractional ownership of those NFTs. And then we automate the whole reward distribution. So once you hold an NFT, you are holding a fractional mining power, so a unit of mining power of the mining facility. And we send you the reward automatically to the NFT, and you can claim them when you want. It's that easy at the beginning. The third step is then to help you get liquid. So in the future, I say in the future because it won't be included directly in our first product, but in the future, we'll use those NFT and let you enter some vault and liquidity pool where you will be able to borrow against basically your NFT. And people who don't own NFT will be also able to join the pool with proof of work assets. So if we have an asset, some NFTs that are mining Bitcoin, you will be able to join with additional Bitcoin to bring also liquidity and open up the field with DeFi. Something that is quite unique also to what we're doing, it's because once it's more specific to proof of work mining, but once you've paid for electricity and maintenance fees, you're still facing one issue is how are you going to renew the mining rig? Because at a certain point, you won't be competitive enough. Because the ASICs miners, they are evolving just like the NVIDIA graphic card for AI, like there are new graphic card every X months that are more powerful, that will give you result for cheaper. And we are creating a special pool that belongs to the NFT holders that we call capital protection. And this is used to renew and make sure we can renew the miners. So you have like an infinite lifetime for your NFT. The good thing is this will be submitted to a DAO vote. So all the NFT holders of a certain mining batch will be able to vote at a certain time to say, do you want to keep mining, or as we are not competitive, do you want your money back? And you will just get the money of your investment back. We will also use this capital protection in DeFi to earn extra yield. And this will be voted by the NFT holders themselves. So if they don't want to take any risk, they can keep the money. If they are more risk averse, and when I say risk averse, we will never, it's more like, let's go on Aave because there is a good yield. You have a pool of a few 100K. Let's just get the yield of 5%, so you get your money back faster. We will also have like different, I think in the background, different strategy, because when you're on the bull run, you can stay in Bitcoin, but if there's a downtrend, why not moving all those Bitcoin into a USDC for a certain amount of time? So we make sure you're protecting your capital and getting it back as fast as possible with, of course, a controlled risk. So that's roughly from the real world asset, tokenized, and liquidity sides of things.
I have so many questions, and also, but Maxime, thank you so much. This is fantastic. So for people that might be into this, which I assume that a lot of you might be, as myself, I would just use myself as a case study. Invested probably around 20K into Go Miner because I was like, yes, I want long-term exposure to BTC. This is fantastic. It's easier. One of the things that Maxime also didn't mention, but is very important, is that like I've tried mining with small rigs on my own. Super hard, right? You really need to pull together because otherwise you might make one beat. Like you don't know. Like you really need more compute, more th so that one of you gets something, then you all share it. So you really need to pool resources as well. But one of the key things I think you guys are addressing, which I am currently suffering from, is I was like, yay, BTC, let's mine, put in 20K. First of all, that 20K, I have no idea if I'm ever giving that back because the secondary market for Go mining miners is not the best, and it's quite depreciated price if you even get it sold. So it's like there's no secondary market, there's no capital efficiency. I have definitely had moments where I was like, shit, it would have been great to have that 20K liquid again so that I could buy more BTC at the 75 dip, or so that I can put more money into potentially what A360 and them are doing. But that money is locked. I have no capital efficiency whatsoever. Now comes the really painful part. Go Miner doesn't automatically update their miners. There's no money put aside that generates secondary revenue streams, just like Maxime have explained, from DeFi yield, etc. So now these are the harsh numbers. I maybe could share my actual print screens, but like I invested 20K. In the first year, I've gotten back roughly 35%, not the 40, not the 50, not the 60 advertised, because as the BTC price went up, so also magically did the service charge. So also did some of the other charges that Go mining doesn't really transparently communicate. But what I'm left with is most likely, if I'm lucky, I might break even. Because these miners are not going to be relevant in roughly 2-3 years. So I've literally made 35% back on my 20K investment, and hopefully over the next 3 years, I'm able to recuperate my principal before those miners are essentially useless, because their energy efficiency compared to the Terra hash that they produce is just not going to be competitive. So I might be able to recuperate my cost, probably not make that much profit, if any. Whereas WeMining's approach is more sustainable, more liquid on the secondary. It has multiple revenue streams, and that revenue stream enable them to essentially keep the hardware updated as per the governance vote, to my understanding, which is addressing some of the biggest pains that I'm currently feeling using alternatives today. Did I understand your some of the USP right, Maxime, or do you want to correct me if I misunderstood anything?
No, that's perfect. And thanks for reminding me that, yeah, you need to pool, actually. It's very hard to mine yourself alone in your bedroom. It's not doable anymore. And as soon as the hash rate is quite high on a protocol, you can't do that anymore. So that's why you really need to pool those resources and deploy quite large facilities. And it makes it not relevant for us as retailers because we don't have the capital to set up a facility that would be interesting to get a decent yield. Somehow you said like 35% per year, like, oh, it's not good, or it's not like the 40, 50 advertised. I think the pain point here, 35 it's still good somehow, because having a 35 yield on your assets, when you look at what banks can offer to you at the moment, 35, it's quite good. I think the major pain point is, of course, a liquidity, because you'd like to stay liquid and kind of leverage your assets while they are mining. And that's not just for mining, because we want to address mining. And I think we're going in the right direction with, you saw the news, I think it was yesterday, like the SEC starting to put out some regulation and around mining. So they start getting taking steps in the right direction, in my view. But then you also have, yeah, of course, to bring this liquidity, and that's not so easy. But we'll find solution to do so. It's just like if you tokenize real estate, it's good, but then you'd like to then kind of mortgage your assets at some point to buy more. Another aspect that I wanted to mention is like sustainability, because that's something that Earth Mining is tackling quite well. And we have a partnership with them, with Gigaton. So Gigaton is basically on the carbon credit market. They are like super big in the UAE. And they have like a subsidiary called, so Gigaton is the main company, and Gigatech is the technology that will tokenize and the emission of certified carbon credit. So one of our goals also is, as we want to maximize the use of green energy, we hope to be able to distribute some carbon credits to the NFT as well, that will be liquid on a secondary market. I have no idea of how much money is going to represent in the future, but I think it's also a good way to see an additional value of what we can do with tokenizing real-world assets, because it will not just make things more liquid, but you will be able to access other, or maybe like find synergy with other market like we can do with a gigaton. And carbon credit, tokenized carbon credit is on another, let's say, RWA that is super interesting because it's not so liquid right now, but many company wants to offset their carbon footprint, and a way to do that is just to buy back carbon credit for from other company that are like that are fully sustainable, let's say. So it's a good pass. And yeah, in the future, I think you just mentioned in a previous call, by the way, what those guys are building is quite amazing. Like I never really dig into what they were building, and right now you really hyped me up. So I'll definitely have a closer look. But I think, yeah, we are very close to unlock like a lot of tokenizing financial assets and even, you know, physical assets in general, because blockchain is definitely the right solution. And what we're targeting is like to really provide liquid mining at scale. So you will start mining and be able to get synthetic assets that you can directly use in DeFi. All your mining rig will be represented not just by an NFT, but by tokens. And you can expect that you will be traded the terahash power directly on the market. So you can imagine that you will have like some perpetuals on the terahash, and when the market goes up, of course, when the hash rate, the hashing difficulty is going high like crazy, you will have your the cost of your hash rate will go up as well, because many people will want to capture some hash rate at the same time, and we'll see yield bearing assets a lot, more and more on the market. So being able to offer it to the retail, I think it's key as well, because this is more the philosophical side of things. But if we let all the mining power in the hands of just few centralized entity, it's a bit sad, I think. Even though we have intermediaries, if the ownership is our, and you know, split it by millions of people or even billions of people around the globe, it's much better for decentralization, and the security come with it, because if it's more decentralized, it's more secure. I think it's also important that we just don't buy spot and speculate on the asset, but we also play a role on the network, and not just Bitcoin. We have this we have our partner Alithium. I really encourage you to check what they're doing, because they've started the project. I think the token was launched end of 2021. And there's still a lot of volatility because it's quite new, but the market is not pricing fundamentals pretty well right now, as we all know. But that's definitely the type of protocol that I think that have very strong fundamentals, and that's why we are building with them as well, not just because they are our partner, but because we think that technology, smart contract at scale, where you can scale on proof of work, they are probably one of the few, or maybe the only project where you can do DeFi at the moment.
It's really, really cool. And I think for anybody that haven't seen sort of the carbon credits, Google a chart and look at the trend over the last 10 years. I think in the last 5 years, you had a little bit of a dip in the last year, but like carbon credits as an entire industry is very much expanding. And more regulatory demands are actually being put in, especially in the EU. I don't know what's happening over the pond in Trump country right now, if he's gonna, but at least in the EU, like you have more and more regulations on putting holding big producers accountable for the emissions that they create on the world. And the best way for them to offset this is by going to the market, buying carbon credits to offset, because otherwise they get penalized, they get fined for it. So you can see carbon markets like the ones that Maxime has mentioned. You also have Toucan, right? It's another one of them. You have a couple of them that have come up that are doing quite well. And carbon credits, sorry, the price per carbon credit is expected to increase. You're also seeing some interesting stuff with like reforestation efforts and stuff like that, but that's for another time. But I love that you guys enable direct ownership, liquidity, multiple revenue streams by having access to DeFi, you're thinking about the long-term sustainability of the hardware, because that was not something that I was thinking about myself, and then I moved too quickly without doing my proper due diligence. And I love that you guys are addressing that, and the fact that you, even on the long term, have a plan for potentially a third revenue stream from carbon credits, to me is extremely attractive. To maybe end with a big challenging question, how are you doing with energy? Because that is also one of the big sort of variable costs with all of these sort of real world assets that require energy. Is a cost, is a product cost, right? To create the hash. Do you have anything that you can share, or do you want to save that until
The cost itself, you mean how do we buy electricity, for example? How do you manage to? So the thing is, yeah, the thing is, we have to sit as with the perspective of companies like Earth Mining, right? When they have, you mostly have to deal with the current price on the market and where you are mining. So you need cheap electricity, of course. The thing is, you can get cheap electricity as a company. You could have a contract in pretty much every country. If you are close to, an electricity source, you could have a contract if it's legal. But that's why we had like some mining, I think in Sweden and so on, they had some mining rigs close to the hydroelectricity production because they could get like some cheap electricity because they were close to it. So when you're a company at the moment, there are different locations where Earth Mining is operating. It's mostly in the UAE at the moment, but it's monthly contract. So they sign a monthly contract, so they know they're going to pay the same rate for the next 30 days. But it's quite stable where they are actually located. So I think in the coming years, it's I think really more like a strategy that you have for the economy of the country itself. If you have a lot of miners on the territory, then it represents a large part of your activity of the country, so you won't cut it. So you will make sure that electricity remains affordable and that's what's happening, I think, at the moment. It's just some countries took the bet to offer like cheaper electricity and make sure miners don't move from there. It's like in Texas, in the US, I think they are mostly located there because and it's quite interesting because mining facilities tend to grow in area where you can implant solar panel or other, use the wind to produce sustainable energy. So I think it will come together with sustainability and implanting. There's also a fun fact is that because we are using most of the electricity during the day, but when you create electricity, it's hard to adjust. Our power plant or a nuclear power plant, you cannot downsize by 50% or 70% during night. So there is even a chance that mining somehow helps as well because you can mine a lot, and balance it. And as the network is connected, you can process maybe transaction. I mean, it's take it with a pinch of salt, of course, because that's just kind of my analysis and some information that I saw in some articles. But yeah, it's better for them if they can like maintain the same power across the day. So if they can have some miners running a certain part of the day to validate transaction, it helps to maintain also the power grid.
It's big place.
I found these arguments because we all know that proof of work, one of the consequences is the consumption of energy, and it's being pointing out mostly because they said it's a waste of energy. And some people came up with the fact that a power grid needs to be constant, and it's good if we can balance it with some other activity. So yeah, let's see how it plays out. But I think it won't be too much of a problem if we're able to scale sustainable energy, such as solar panel.
And I think we can also just mention that like the UAE is a region and a regime that very much likes crypto. I think Binance is now doing the entire Binance week because the UAE government invested roughly $2 billion straight into Binance. They want this activity in the region. They want to attract it. They're definitely going to try to give good terms to keep it once they've attracted it. I'm so sorry. I need to jump to space with our wonderful friends at Cheeky Crypto. But first of all, Maxime, thank you so much for joining us. Check out We Mining. Everybody in here, I've heard that some of you have already done it. We're going to do a lot more stuff with them. This is not the only time that you get to see this beautiful man's face. He's going to come back. Check out We Mining. They're doing great stuff. And if you want, feel free to join us with the Cheeky Crypto Legends in literally 1 minute on Twitter. We're going to be discussing what the fuck happened in crypto over the last week. Maxime, thank you so much for coming. Awesome
Thanks
to have
a lot for having me.
We
We're
Mining.
just getting started,
Thanks,
so
Maxime.
you will hear from us. Thanks a lot, guys.
For sure.
Awesome. Take care, everyone. Have
And
a
for
wonderful-
everyone waiting, I will just share the code right now. For everyone, thank you for your patience, everyone. So the code of today is Real World Asset Mining, RWA Mining. I will also write it down so you can. Oh shit! I forgot if I put a capital or not. Big stress.
We
Mining.
want to win, Thomas.
This is a code. You have it in the comment. Real World Asset Mining, RWA Mining. Maxime, thank you again. We will have you, I guess, very soon in a couple of weeks, maybe 1 month.
Thanks a lot, and thanks everyone for listening until the very end. I highly appreciate it.
This is our community. It's the best.
Thank you. Bye.
See you, everyone. Bye-bye. What the fuck is this video, guys? Absenteeist, I'm shocked with what you've just did. I don't know how I should take it. It's interesting, though, the Firefly. Wow. All right. See you, guys. Thanks for joining.